you guys that are unfamiliar, the dollar index and the euro dollar are basically the same thing. They got dollar indexes. I always forget the numbers. What was it 60% of the dollar index is the euro dollar? Is that right, guys? Come on. Could be a little off one way or the other. It's something like that, right? So I personally don't, and not to go off on too much of a rant, I don't think the dollar index tells us anything relevant as a trader. As an investor, yes, maybe. I think as a trader, it tells us nothing of relevance. And you can imagine the blowback I get when I say that, but I just don't think it tells us. I mean, who can tell me what it tells us? I mean, you can even make the case for, right, the chicken or the egg thing, right? Well, is the dollar index telling us that the euro dollar is going to move? Or is the euro dollar moving what's allowing the dollar index to look the way it does? So I as an investor, it makes sense because you're looking at longer term trends and whatnot. I think as a trader, I've never found any relevance in it. I don't think it tells us any valuable information or any more information that we can't see just by looking at a chart. That's just me, and that's my whole thing with like correlations and whatnot. I think Forex is unique in the fact where we don't really need to rely on other things to tell us what something else is doing because we have the actual game in front of us. We have the battle. I don't need to look to the left to tell me what's happening on the right. I can just look at the actual battle that's taking place, and that can tell me all I need to know. The unique thing about Forex. I'm curious about, I think it's 60%. Makeup of dollar index. Who can tell me this? Investopedia probably. You're going to tell me? Dollar index. Here it goes. Dollar index is... The index is currently calculated by factoring in the exchange rates of 6 major world currencies, which include the euro, the Japanese yen, the Canadian dollar, the British pound, the Swedish krona, and the Swiss franc, the Swedish coronavirus. The euro is by far the largest component of the index, making up about 58%. Officially, 57.6% of the basket. The weights of the rest of the currencies in the index are the yen, 13.6, pound, 12 basically, Canadian dollar, 9, Swedish krona, 4, and the Swiss, 3. Here we go. So 58%, a little bit off. I've fed you lies. Useful for dollars pairs. See, I don't even think it's useful for dollar pairs, Glenn. Let me ask you this. How? And I'm open to this conversation. I'm very open to changing my mind, but how? Like, I don't. Explain to me how. What does the dollar index tell me that a price chart won't tell me? I guess that's where I always get stuck, is what information of value does it actually give me that I can use for trading? Depends on if, okay, well, explain. So how can the dollar index benefit my trading? Meaning, what can I take from the dollar index that will help me out with trading the dollar Swiss or something? That's the part that I always get stuck at. That's the question, Mr. Anderson, that I can't get an answer to. Let me just check on euro real quick, by the way, now that we're still holding the lows. Just for correlation, why I wouldn't have gone short to Aussie. Well, let me ask you. I don't think it helps with correlation, to be honest with you. I mean, does the dollar index doing what the dollar index does what does that tell you about the Aussie dollar? Does it? Let me ask you this. So here's the question: does the information on the dollar index, is that more valuable than looking at the Aussie dollar chart? Because I would make the case for argument purposes, I would make the case that if I'm comparing the two, if I'm looking at the dollar index, which is the U.S. dollar versus six currencies, and trying to gauge strength or weakness of the dollar versus the Australian dollar, if I had a choice between looking at the dollar index, which is a combination of six currencies heavily weighted by a few, and I had the choice of looking at the Aussie dollar, which is a 1-to-1 head-to-head battle between the Australian dollar and the US dollar, I would make the argument that the chart that would give me more valuable information is of the Aussie dollar, because that's the game that's actually being played. Right? If I want information on the strength of the US dollar versus the Australian dollar, I've got a chart that tells me that. Right? Why would I need to go to another chart? Right? If I want to see the result between Manchester City and Liverpool, I'm not going to watch a whole bunch of other Premier League games. I'm going to watch that actual game. That's the mindset I've always had. So that's why I've never understood the value of it. Unless, like, again, long-term investing, if you're investing in the dollar or something like that, then, obviously you want to see strength against numerous currencies and not just an individual one. But from a trading perspective, that's why it's never made sense to me. Because even if you, so here's another example. Let's say we get really positive news from the euro, right? We get a lot of euro strength across the market. That's probably going to affect the dollar index, is it not? Because of the heavy weightedness. But does that necessarily give me information on the Australian dollar? I mean, the Australian dollar could be very bullish against the US dollar, but the fact that the euro dollar or the euro is extremely bullish is going to result in that dollar index moving in something that is heavily geared towards that specific currency pair. So I just don't see it. I'm not one of those. I'm not going to be a hardcore, like, don't look at it, it's evil, blah blah blah. I always enjoy the discussion. I think it's interesting. But for me, I'm still waiting for someone to tell me how it's valuable, or how it's more valuable than looking at the actual chart. The only thing I can think of is it kind of tells you from if a specific movement was caused more by movement of the dollar, or if it was one pair, but I have no idea of what value that brings to actual trading. Yeah, that's a good point. That's a good point. So if Andrew's saying is, like, if you see, let's say we see movement on dollar Canada, or Aussie dollar, for example. That's the example we use. Let's say we see movement on Aussie dollar, and we're asking ourselves a question: hey, is that dollar strength or is that Aussie weakness? Go into that dollar index, perhaps can tell you if that dollar index is booming. Now it gives you the answer, like, hey, this is probably dollar strength instead of Aussie weakness. That's a good point. That's a good point. Because what I'll typically do in those situations, I'll just scroll through a bunch of other charts, where I'll be like, okay, let's look at the Canadian dollar. Let's look at all the dollar crosses I have, and let's see if there's anything in common. Wait a minute, Aussie dollar is the only one moving, probably not a dollar thing. But that would be a simpler way of doing it, because you have that basket. So instead of needing to look at 4 charts, which I've always got charts up anyway, so it's not that much of a difficulty for me. But that would make sense. Instead of looking at different charts to try to gauge, you can look at this one dollar index and be able to see. That could be something. Bobby said, I don't know too much about correlations, etc. Good. But I think there's a difference between correlation and causation. Yeah, there is. And that's, I think, yeah. And perhaps those words need to be switched as far as how people view some of the markets. Yeah. Glenn says absolutely, but if the U.S. dollar index isn't useful all the time, But the U.S. dollar index isn't useful all the time. It depends if there's conflicting info, then stay out. I don't know. We're gonna have to disagree on that, Glenn, which is okay. We don't have to agree. I just don't. And again, I'm not saying it's not valuable. Well, I'm kind of saying that. I'm saying I think what's more valuable is the actual chart. I think that's, if you want the answer, go to the source.